may have sensed that things in the real estate market are starting to change a little bit. Have you noticed those for sale signs sitting in the yards just a little bit longer? Or how about price reductions? Those seem to be up. So, what in the world is going on? Is this an indication of trouble ahead? And are home prices likely to fall in the coming months or years? And how does the fact that we are in an election year impact all of this? Hi, this is Andrew with the Andrew Smith team, eXp Realty here in Frisco, Texas. And in this real estate market update for July 2024, I'm going to do my best to unpack all of this for you and let you know how the latest data impacts you if you're planning on buying or selling a home. Now, I'm going to start out by sharing some information that is universal. It impacts all real estate markets across the country before diving into some of the specific stats and trends that I follow here in the local Frisco market. Now, even if you don't live in Frisco or are not interested specifically on what's going on in Frisco, I invite you to stick around because the market report that I'm going to be sharing with you is available for every single city and zip code in the country. I have a link to it directly below in the description. So feel free to follow along, see the stats that I'm looking at, and then go ahead and look up that exact same information in the market that you are most interested in. Now, I want to start off this report by talking about overall home sales. And I realize that the total number of annual home sales is probably a number that agents like myself are more interested in than you or the public in general. But it does help provide some context with regards to everything else that I will be discussing. Here's what Lawrence Yun recently had to say. He said, home sales have lingered at 30-year lows. And since 70 million more Americans live in the country now compared to 3 decades ago, it's inevitable that sales will rise in coming years. Inventory will grow steadily from more home construction, and various life-changing events will require people to trade up, trade down, or move to another location. And when you take this into account with what he's talking about with regards to supply, it directly impacts home prices. And when you look at that, I mean, it takes two to tango, as they say, and you'll know that prices are a direct result of supply and demand. In order for home prices to fall effectively, you're going to need to see a rise in supply coupled with a drop off in demand. And that has not been the case. We haven't seen the two work in that order. We've seen demand drop off, absolutely, which is why the number of home sales, partially why the number of home sales is down. But at the same point in time, we've seen supply fall. And the fact that home sales were as low as they were last year has just as much to do with the fact that there wasn't anything to buy as it does buyer pulling back because of high mortgage rates. So when we talk supply, it can only come from one of three places: resale homes, new construction, and distressed properties. And, if depending on where you live, new construction may be a big part of it. Here in Frisco and the surrounding areas, there's new construction like crazy. But it's important to point out that we were underbuilt for well over a decade. We are only now starting to get back to the pace of new construction that was common in the early 2000s. I mean, since the market crashed, new construction, annual new construction of homes has lagged way behind what we actually need to bring to market compared to the number of households that have been created. And then when you look at distressed properties, you may remember, I mean, the pandemic hit and there were going to be a tsunami of distressed properties, and it flat out hasn't happened. They aren't there, and they're still not there. Why is that? Well, the economy's been pretty good. The labor markets have been strong. Wage growth has been good. And you couple that with the fact that many people have really low mortgages, and distressed properties aren't a problem. People are not in trouble. Could that change? Yes, but there's nothing on the horizon to indicate that it will in the near future. Which brings us to resales, right? So where are all the resales? And you may have heard the term lock-in effect. It's been used a lot. And it's interesting when you look at it, because if you think about it, if you're a homeowner that has a low mortgage rate, why would you sell right now or in the past year? Why would you trade your low mortgage rate for a mortgage rate of 7.5? And the answer is you wouldn't. So again, that is where the pullback on the supply side came from. Just to give you an idea, 39% of all households in the United States, or 39% of all homes, are owned free and clear. They don't have a mortgage on them at all. For those homes that do have an outstanding mortgage, 76% of those have a rate below 5%. 60% have a rate below 4%. So again, until the current mortgage rate gets closer to the rate that many of the current homeowners have, unless there's a compelling reason for them to sell, they're just not going to. Now, there are signs that home prices are starting to flatten out, and you'll see that when I share the Frisco data in just a few minutes. And if you've happened to see any of the other videos that I've put out recently or any time in the last few months, then you'll know this. I've been talking about the signs that home prices are flattening, regardless of what the mainstream media has been reporting with regards to year-over-year price increases. That's looking backwards. The data I'm looking at is looking forward on where prices are going. And I have to say, that's honestly a good thing. I mean, it's not sustainable to have prices rising at the pace that they were, especially considering what a problem affordability has become. High prices, high mortgage rates, affordability is very, very challenging. And I get that. So the fact that we are seeing home prices flatten is a good thing. But rather than that being an indication of a correction or problems coming up, what I'm seeing currently, at least in this market, is a market that's finally starting to return to normal. And let's be honest, a lot of people in the market today don't know what a normal market is. Your first time home buyers, unless they were actually watching what was going on 5 years ago, they don't know what normal is. I mean, right now, things are coming back to normal, but it's such a departure from what we've seen that it's causing a little bit of concern. So again, hopefully this helps alleviate some of that. Here's what Dennis Shearshiftkoff, and I've probably butchered that name, I'm sorry, but he's the adjunct professor of economics at City University of New York. He said, when it comes to the real estate forecast for the next 5 years, I am cautiously optimistic. I believe we're going to see a lot of ebb and flow over the next 5 years, some highs, some lows, but overall, a healthy market. Prices should continue to rise, though more slowly, and buyers might enjoy more options as inventory expands. But remember, real estate is profoundly local. What happens on a national scale can manifest differently in your backyard. And that's where the local market reports that I have come in so useful. So again, there's a link to that in the description below. So feel free to sign up. You can have that delivered to you each and every week. Now, the wild card in all of this is mortgage rates. As I just mentioned, the lock-in effect is in place. Mortgage rates, right? People that own a home are not going to trade their low rate for a much higher one. And without a doubt, affordability has been challenged. I mean, higher mortgage rates have caused sellers not to sell and prevented many buyers from buying. But economic news out this week showed that inflation is coming down. It is cooling, and the labor market is cooling as well. As a result of that, mortgage rates dropped. They dropped this past week more than they have dropped in months. And the consensus now is that the Federal Reserve will start cutting interest rates in September. Now, Mortgage rates are not directly tied to what the Fed does, but mortgage rates do closely follow inflation. So as we see inflation fall, you will continue to see mortgage rates fall. And that could be really good news. Now, as mortgage rates come down, you're going to see more home buyers come back into the market. But the real question is, will sellers return? I mean, if buyers come back faster than sellers, then that's going to put upward pressure on home prices. If rates drop enough for those sellers that have been on the fence about selling, for them to come back, that's going to help keep some more balance, and it's going to help keep a lid on where prices go. Now, what about the election, right? It's dominating headlines right now. We don't honestly, as I'm recording this, even know exactly who's going to be running. I mean, we think we do, but we're not sure. But what impact is the election likely to have on the real estate market overall? And to answer that question, why don't we take a look at how the real estate markets have performed following past elections? So first, with regard to the total number of home sales, in 9 of the last 11 presidential elections, home sales went up in the year following the election. The exception to that was 1981 and 1989. Now, before I move on from this slide, I just want to point your attention out just one thing. Look at total home sales for 2005, 7,080,000 home sales for the year. Now, as I mentioned at the very beginning of this video, is home sales are down. To give you an idea on how far down they are, in 2023, home sales were just a tick over 4 million. 3 million short of where we were in 2005. And the expectations for this year is that home sales will finish the year at somewhere around 4.1 million. So you can see how far behind previous years we are. Even in 2009, the year immediately following when the crash happened for most of the country, home sales were higher than we've experienced last year and most likely this year as well. Now, when we look at existing home prices have gone up in 7 of the last 8 presidential elections. The notable exception was 2009. But remember, we experienced a crash in 2007, 8, depending on where on the country you lived. So that one's a little bit of an anomaly, but it shows that existing home prices went up in the year after a presidential election. And then lastly, let's look at new home prices. New construction's on everyone's mind, especially here in the local Frisco market. And again, 10 of the last 11 presidential elections, new home prices went up in the year following an election. The only exception, again, being 2009, right after the markets crashed. So what does that say? If you're on the fence about buying a home now and not sure if it's a good time, know that pricing is likely to go up based upon historical matters. If you're looking for the best deal and you want a new construction home, if you're looking to move fairly soon, quick move-in homes offer you that opportunity. You may have noticed every week I usually put out a video featuring one of the quick move-in opportunities in our local marketplace here. So if you'd like additional information on those or some of the new construction opportunities, please don't hesitate to reach out to me. All right, so what we're looking at here is my Frisco market report. And again, if Frisco is not the area that you like or are interested in, use this search bar right at the top to put any city or zip code in, and you can get the same information for that area. Now, there are 3 pieces of data that I look at on a weekly basis to help me see what's going on here in the local market. The first is median list price. The second is inventory. And the third is price reductions. So let me scroll down to that section of the graph. Now I'm zoomed in here so that you can see things a little bit easier. So on this right here, this is looking at median list price. This is going back nearly 5 years, but I'm going to zoom in just to this year. right? To give you an idea of what I'm looking at. Now, you may be wondering, why am I looking at list prices? List prices don't tell us much, do they? Because anyone can list any house for any price. And while that is true, the vast majority of sellers in the market today are not listing their home to test the market. They're listing their home to sell their home. So with that in mind, we're not seeing a lot of canceled listings. We're not seeing a lot of people just throwing it out there to see if they can get a price. You do see it a little, but not much. Now, in my local MLS, I do have some other trends that I can look at. And one of those I follow is list to sales price ratio. So it's like, what percentage of the original list price is our homes actually selling for? And here in Frisco right now, we're running at about 98%. So what that tells me is that homes are selling, for the most part, within 2% of their original list price. Well, knowing that, if I track the median list price, it's giving me a good general idea of where future home sales numbers are going to be. Now, with that in mind, what am I looking for? I'm looking for the trend. Are list prices trending up or are they trending down? Now, depending upon your market, it's important to understand that the markets are seasonal. You're going to see here, prices took a rapid run up in list prices in January into February. That's completely normal, right? As the markets start to come out of winter hibernation, so to speak, you see a run up in pricing every single year. But that run up in pricing usually lasts longer than it did this year. So as you can see, if we pick this spot out here, February 23rd, we had a week where things dropped off a little bit. But if you look in general, the 7-day average, which is way more volatile than the 90-day average, right? But the 7-day average back in February was 797. The 7-day average here in the first week of July is 779. So there hasn't been a big change, and there never was a massive change. Even at the peak right there, you're looking at 815 for 1 week. Okay, so you didn't see a huge fluctuation in pricing. This stayed relatively flat. You can also see since the middle of April, the 90-day trend line has been relatively flat as well and is actually starting to dip down. Perfectly normal, perfectly seasonal right there. But with this starting to go flat right here in May, that is what was telling me, along with the fact that the 7-day trend line's been pretty flat going all the way back to February. That was giving me an indication that pricing wasn't doing the massive run up that we saw in previous years. Pricing was actually starting to flatten out. That pace of appreciation was coming down. So that's why I like to track the median list price. Second thing I follow, inventory. This goes back to supply. We're looking at supply. Now you can see, like every year, supply has been running up, right? Completely normal. That happens, except the total number of homes for sale right now is actually higher than it has been in quite some time. It's not unprecedented. These numbers were up in the 900s pre-pandemic. So we're not quite there yet for the most part, but it might be hard to see on this. This line, the 7-day trend line, is starting to flatten out. That's telling me that there's not as many new listings coming to market. With existing inventory not selling as quickly, it's possible that this will trend upward for a little bit longer. However, on the 7-day listing number of new listings, that number is starting to taper down, which tells me that sellers are starting to pull back. And we've probably seen, or are very close to have seen, our peak of new weekly listings for the year. So another one to keep an eye on. Lastly, price reductions. Okay, percentage of properties with a price reduction. So you can see here, if we go back into December, 52.5% of homes listed were taking a price reduction. On the 90-day trend line now, it's at 42%. If we look at the 7-day trend line, we're at 53%. Is that a number I'm worried about? No. It's not unprecedented in our market whatsoever, and it is actually starting to taper off. But why is that happening? Well, many of the agents in the market, many agents in general, don't necessarily follow the stats on a weekly basis as closely as I do. Some do, but not all of them. So you hear on the news, pricing is up 5%, pricing is up 6% year over year. And with that in mind, they may look at what homes have recently sold for in the neighborhood. They're pricing that they're taking those price increases into account. And that's where they're listing the homes for, or that's where the seller wants to list the home for based on their perception of what the market's doing, even though that might not be what the market is actually doing. And after 2 or 3 weeks, they're finding, well, no one's really looking at the house. I think we need to cut the price. As a matter of fact, I've seen it in my own neighborhood. Every night my wife and I walk the dog, we go around, we might see a property come up. I've seen a new listing come up. And, I'll say to her, I go, that was listed for this price. And you watch, they're going to reduce it because that's not where the numbers are. And lo and behold, every single house in the neighborhood where that has happened to has reduced the price. And the vast majority of them, after they've reduced the price, have then gone under contract. So again, it's just having a clear understanding of where prices are going and what you need to do. Now, if you continually see inventory running up and it keeps going higher and higher and higher, and you also see price reductions continually going up higher and higher and higher, that is a good indication that prices are going to soften in the months ahead. So that would be something to keep an eye on. But that is not what we're seeing currently here in Frisco. As I just showed, our inventory is starting to plateau and flatten out. So hopefully running through the information like this has been helpful. If it has, let me know. I'd love to know in the comments below. Is this a useful explanation for you and what's going on in the market, or would you like to see something different? Comment below, let me know, and I'm more than happy to introduce additional stats or change the format if that would be more useful. And as always, if you have any questions about any of this data or a specific situation that you would like to discuss in more detail, go ahead and call or text the number that is up on your screen. I'm always happy to talk to you. And if there's anything I can do to help, I will do that for you. Alternatively, if you want to schedule a call with me, in the description below, there is a link to my calendar. Go ahead and schedule a free 30-minute consultation. No pressure, no obligation whatsoever. But if you've got a situation you'd like to talk through in order to make the best buying or selling decision for you and your family, I would be more than happy to talk to you. Now, don't go anywhere, as I know you're going to enjoy one of these videos coming up next. Thanks so much for watching.